Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment the market is currently testing and rejecting a minor level of previous monthly resistance from which this red candle to the downside was created, which the market has now broken to the upside and is currently retesting as support. Now, as the market is testing previous resistance turn support, we could expect bullish price action to be developed away from this area. At the same time, we must also notice how all this zone is very strong monthly supply and resistance. However, for reasons that we will be speaking about later on during the analysis, at this point, there is the possibility that since institutions are longing gold, the market could manage to break through this area, which in the past has been acting as very strong resistance. However, at the moment, there is the possibility for a potential breach of this zone to the upside. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, what we must notice is that at the moment, the market seems to be shifting structure. In fact, if we follow the movements of this market from a pattern standpoint, we can see an impulse to the downside, a correction, a lower low, and an equal high. Now, generally speaking, when you see impulse, correction, lower low, and equal high, after that, what you expect is a correction before then getting a reversal higher, essentially for the creation of an inverted head and shoulders. So what we could expect in a situation like this is for the market to provide a correction before then printing more bullish continuation for the creation of this inverted head and shoulders. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, the first thing that we must notice is that we do have a quite strong impulse followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a market that at the moment is testing that zone in between the 0.618 and 0.786 of the Fibonacci taken on this daily impulse. At the same time, if we look left, we can see how this was the previous daily resistance, which is now turned support. So essentially, we have confluence of support inside of this region because we have both the Fibonacci levels that we have just identified and this previous resistance turned support. This creates confluence of support inside of this zone, increasing the probabilities to see more institutional longing away from this area. Why do I say institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which essentially are hedge funds, what we can see is that while before net positions were getting decreased from 195k all the way down to 165k, essentially meaning that institutions were moving to the bearish side of gold as the market was testing this very strong monthly resistance. From here, we could expect a rejection lower, which is in fact exactly what the market did. However, with the last report, this changed because we went from having a decrease of the net positioning to now having a strong increase of the net positioning, going from 165k all the way up to 193k. This means that institutions are moving once again to the bullish side of gold, adding 23,000 longs and closing 4,400 shorts. This means that institutions, as they are increasing longs and decreasing shorts, are expecting a break above the monthly resistance that we have identified at the beginning of the video. This means that from a daily perspective, since we are currently inside of a confluence of support zone, there is a possibility to see more institutional longing, which at that point would increase the probabilities of seeing a potential rejection to the upside away from this area. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll over, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.